mentioned, Concade performed poorly this week by having a downward trend.
Shanghai Composite Index share price was at the highest for this week at 2,663.43 yuan on Monday. The price decreased slightly on Tuesday before falling down to the lowest on Friday at 2,598.87 yuan.
The mainland China market, which investors are watching closely as trade tension between Washington and Beijing continued to weak and sentiment, ended the trading week lower. The midterm election in US, which determined how Donald Trump will go through with his domestic policy, also influenced the market price to go low.
Now looking at Shanghai International Airport share price, it showed the same downward-looking trend as the Shanghai Composite Index. Prices started high on Monday at 52.2 yuan, decreased very slightly on Tuesday, and then fell down dramatically for the next 3 days and closed at the lowest on Friday at 49.64 yuan.
The company may have been heavily influenced by the Shanghai overall market performance.
Shanghai International Airport Company Limited provides airport services in Shanghai, China. It offers custom inspection, security inspection, inspection and quarantine, flight delay, visa and smoking control instruction.
In regard to how the share price for Shanghai International Airport Company Limited has been following the downward trend of the Shanghai Stock Exchange share price, Shanghai International Airport should look into cross-listing their stock to other stock exchange markets. The uncertainty on how the market will improve following the ongoing trade war from US to China. Cross-listing their shares to other international stock exchange markets like the Japan Nikkei market and others would help to lower the risk of non-performing market like what Shanghai Stock Exchange market is currently going through. That's all for me. Now we're going back to the studio. Thank you.
Now moving on to Hello Andrew. I am live from Swiss Exchange for this week.
On Monday, the stock price showed a positive with an increase of 0.18%, which closed the market at 9,008.58 Swiss francs. However, the Swiss Exchange dropped slightly on Tuesday by 0.18%, in which the market closed at 8,992.07 Swiss francs. On the following day, the Swiss stock market with an increase of 0.65% as compared to previous stock market, closing at 9,050.53 Swiss francs. Thursday, the market hit its highest price market for the week, in which the stock opening price was 9,073.83 Swiss franc with a positive 44.27 change and an increase up to 0.49%. Thus closes the market at 9,094.90 Swiss franc. Marking the end of the week, Friday's stock declined by 0.23% change and closed the market at 9074.03 Swiss franc. Next, we go to the Nestle market. This is different from the stock market of Nestle, in which throughout this week, the stock market showed a strong performance compared to the six Swiss exchange. Nestle is a nutrition, health and wellness company which engages in the manufacture, supply, production of prepared dishes and cooking aids, milk products, pharmaceuticals and ophthalmic goods, baby foods and cereals. On Monday, 5th November, Nestle's stock market increased 0.60%, ending the price at 84.42 Swiss francs. On Friday, the 9th November, Nestle's stock market recorded the highest price during this week with an opening price of 84.50 Swiss franc and resulted in an addition of 0.46 points with an increase of 0.54% change, thus ending the week at 85.50 Swiss franc. This showed that Swiss Asian stock market and Nestle stock market reached its lowest price during this week on Tuesday, and both stock market ended with the highest price for this week. There are several factors that affect Swiss stock in the which U.S. government filed a civil fraud lawsuit accusing Union Bank of New Zealand of defrauding investors in its sale of residential mortgage-backed securities leading up to the global financial crisis. China growing concern also contributed to the negative mood among investors after data showed China producer price inflation slowed for the fourth month in a row in October. Moreover, the slight loss on Tuesday is because traders are in a cautious mood ahead of the result of the US midterm election. That's all from me. Back to the studio.
From Australia. Hi, Azmi.
Hello, this is Azmin from the Australian Securities Exchange. Looking at the Australian Stock Exchange at the ASX 200 index this week, we can observe that there was an increasing trend throughout the week until Thursday, but it then fell down slightly on Friday. The Australian shares were priced at $5,818.1 on Monday, increased to the highest price on Thursday at $5,928.2, and then it decreased down to $5,921.8 on Friday. Despite of the fluctuating performance of the Australian stocks market, the Commonwealth Bank of Australia performed very well this week. Commonwealth Bank of Australia is a leader in the Australian financial industry. It is a retail bank and it provides a broad range of banking and financial products and services to retail, small business, corporate and institutional clients. Now, going back to the bank's latest performance, its stock price increased from Monday to Friday. The share price was at $67.98 on Monday and it increased to $70.95 on Friday. The share price increased by 4.37% in just 1 week. Even though the bank showed very good performance in terms of the share price by not falling down on Friday like the Australian stock market, Commonwealth Bank still need to be careful that the overall market may be able to influence its price later on. It is also advisable that the bank should cross-list its shares to other international stock exchange to avoid having all of its shares to get dragged down if the overall Australian share market fall further down in the future. However, the Australian economy can still be considered as stable and promising. Its economy remains outstanding among developed economies, supported by favorable global conditions and strong domestic demand from population growth. However, global uncertainty and high household debt may weaken growth prospects. And that is all from me, Sydney. We're going back to the studio with Aliyah. Thank you.
And we have Shadia in the line.
Konnichiwa. Good afternoon, I am Shadia, bringing you live on Tokyo Stock Exchange Market for this week on Topic Score 30 under the Japan Exchange Group. It shows a fluctuated market through the week. The start of the market showed a downfall with opening price ended at 732.97 yen, which show a decrease of 1.24% change. On Friday, Topic scores closed down with a decline of 0.77% change and closed at 7.60 yen. Tokyo Stock Exchange market performance affected Honda Motor, which also experienced fluctuation in their market. Honda Motor develops, manufactures, and distributes motorcycles, automobiles, power products, and other products worldwide. The company operates in motorcycle business, automobile business, financial services, and others. Honda Motor experienced downturn during start of the week with drop of 0.99% and it priced at 3216 yen. However, the market reached its higher price on Tuesday, ending with 3317 yen, an increase of 3.14% change. The price stock on Wednesday dropped and fell at 2.65% change and the market at 3229 yen. On Thursday, 8 November, the stock price for Honda showed positive note, ending at 3264 yen, an increase of 1.08% change. And on Friday, positive net with 0.49% change and closed at 3280 yen. Mean market capitalization of is 4.941 trillion yen. This indicates that both Topic Score 30 and Honda Motor market share experienced an up and down market prices. And Topic Score reached its highest price on Thursday with price of 753.40 yen, while Honda on Tuesday with an ending of 3317 yen. So the cause of the fluctuation for both Topic Score 30 and Honda is because of overcautious over the US-China trade friction, and moreover, great concerns over the possibility of US President Donald Trump use protectionist move if Republican Party lost its votes during this Tuesday's midterm election. So some investors bought share rise after the election, saying that closely watched political event has been an uncertain factor for the market. That is all from Tokyo Stock Exchange Japan. Back to the studio. Thank you.
US, let's hear Ivy.
Hi, I am Aimee Hajar, bringing you live analysis of the US stock market.
The US stock continues to trade in a mixed performance, where fluctuation can be seen on the Nasdaq Composite Index performance this week. Monday, Nasdaq Composite Index lost 28.14 points, declining 3.18% to close at $7,356.85. However, there was an increase in which Nasdaq Composite Index on Tuesday opened at $7,326.07 and closed at $7,375.96, thus moved 0.64% gained. Wednesday recorded the highest price of Nasdaq Composite Index, where the market opening price was $7,446.09 and closes at $7,570.75, marking a gain of 194.79 points with a 2.64% increase from the prior day. As of Thursday and Friday, the Nasdaq Composite Index finished in the red and closed down 0.5% at $7,530.89 on Thursday, and ended Friday's recession lower, where Nasdaq Composite Index was down 123.98 points with a declination change of 1.6%, closing the market at $7,406.09. In spite of the flutter of the American stock market, the Microsoft Corporation started off well this week, with an increase in the price market until Wednesday, but declined on Thursday and Friday. Microsoft Corporation, technology giant that develops, licenses, and supports software, services, and devices solution worldwide. On Monday, November 5th, Microsoft's latest trading session closed at $107.5, marking a positive change of 1.27%. Tuesday's stock went up by 0.20%, in which it closed at a slight higher price than Monday at 107.72%. Wednesday market showed a higher price boost this week, in which the Microsoft market closed at $111.96, which rose 3.94%, an increase of 4.24 points. However, the market showed a gradual drop on Thursday, which ended with a price of $111.75, a decrease of 0.19%, and further dropped on Friday by 2.18 points and 1.95%, which closed the price of the market for that week at $109.57. This shows that both Nasdaq Composite Index and Microsoft Corporation stock reached the highest price on Wednesday and experienced a price downfall on Thursday and Friday. Due to the performance of Nasdaq Composite Index, it reflected weak performance in information technology and communication services such as Microsoft Corporation. Overall, stock closed the week on a down note as multitude of concern, including fears of slowing economic growth, in which it is from the concern of overinflation and rising interest decision stalled a rally which was squared by the outcome of midterm election. U.S. Federal Reserve reaffirmed its stand and tightening monetary policy, strengthening the dollar. Moreover, the market lost its momentum and closed in the red in the last 2 days as U.S. crude price plunged below its psychological barrier. More evidence on Chinese economic slowdown, sparking a fear of global growth. That is all from the U.S. stock market. Back to the studio.
Starting to see broader monetary policy tightening, but very low levels and global growth still look solid. USD continues to lead the way and has the last 6 months periods of GDP growth in 4 years. Of course, the concern is the heightened labor market shortage. Labor shortage are becoming more intense and tightening. We think that it is going to continue to high rates once per quarter, but the wages could also squeeze corporate profits. China is the other area of concern. They are at the receiving end of US tariff. So far, the impact has not been too severe, a mild slowdown, but confidence is still in a positive territory. Exports are only 20% of GDP and US are only 20% of that. We are receiving a positive policy response in China, but so far it has been quite mild and hard to see much impact, but the implicit promise of more to come if necessary. We are also worried that the China trade frictions could develop into a new Cold War and reverse the peace dividends of 1990s. That will be a big savings on unproductive defense spending and the improvement in US finance.
The danger is that these benefits are all undermined by higher geopolitical tensions. But there is a longer-term concern. Short-term outlook for global growth is still solid, despite rising worries that are quite typical in a late cycle as policy tightening threatens to bite.